What's up, traders? What's up, tycoons? Stock market rip today. Absolutely great to see. We're going to go over some simple concepts in today's video, signs of a healthy market, some stock market cycle stuff. And then we've actually got some really amazing data for you guys. Okay. You guys know that we love the data. We love the numbers on this channel. And we're going to break down all of that in today's video. So, the first thing we'll talk about is the signs of a healthy market. And then we'll talk about stock market cycles and the characteristics of the greatest winning stocks before they made their moves. Really, really, really nice stuff right there. Okay. This is super interesting right here. You guys will really enjoy that. Right. But as always, the content provided on this channel is for informational and educational purposes only and is not intended to be relied upon as legal, financial, or investment advice. So, be sure to read through the disclaimer. And if you're new to the channel, I actually started a completely free newsletter for you guys called Investment Intelligence, giving out free, valuable finance content, free trading content. And I try to sprinkle in 1 to 2 free trade ideas a week in there. Okay. You can take a look at the website, right? And you can take a look at some of the previous newsletters, and many of the stocks ran up over 10% after, getting into or rather writing about the newsletter plays. Okay, the most recent one was RTX. All right, we put that out on December 28th. And you can see people in the Discord hitting me up talking about RTX January call options going up over 88%. They actually went up much higher than that, up to about 130%. So sign up for the newsletter. If you guys want to join the Discord, it's only $1 right now. Okay, promo code JAN24, right? Celebrating the new year, celebrating January 2024. That will get you access to all of my different analysis, all of my different trade ideas, everything I'm looking at, as well as, other great valuable resources, custom scripts, indicators, different things like that. Okay, so you can get into the Discord for just $1 using that promo code JAN24. And, there's been lots of really, really big plays in there. Okay. Carnival Cruise Lines was a big one. Unity was another really big one. SoFi was another really big one. Lots of really big plays that we've had in the Discord since launching it 2-3 months ago. Now, do you want to upset your favorite bear? Tell them that when the S&P 500 gains over 10% in November and December, like 2023, the returns the following year get even stronger, right? Q1 and the following year returns have never been lower. So a big final 2 months of the year is quite bullish for the next year. This is from Carson. Right. And so you take a look here, and basically Q1 has some really, really impressive numbers. Okay. The lowest, it's basically about 5% or higher. There was this time period here in 1954 where Q1 was only about 1.7% gains. But other than that, it's right around 5% or higher. And then the next year, the lowest return is 10.8%. Okay. 10.8% or higher. So, based on this statistical data, the S&P 500 looks like it's going to see a 10% or better year in the stock market. Now, why would that be? Okay, let's not try to talk about valuations. Let's just use some simple concepts, right? And try to use a little bit of common sense. Well, what is 2024? It's an election year, okay? If someone is running for re-election, do you think that the stock market crashing, okay, and a bear market is going to help them get reelected? Very simply, no. Okay. And you don't have to go too far into a conspiracy and talk about how the markets are rigged or anything. But you can use a little bit of common sense that it would make sense if stocks are going to go higher, all right, and not lower during an election year. Okay. And, I've covered a lot of election seasonality cycles. We talked about pre-election years. We talked about midterm elections. We talked, and we've discussed the election year cycle as well. So just something for you to think about. Okay. Now, the percentage of stocks above the 50-day moving average crosses 90%. Since 2000, SPY is higher 98% of the time 12 months later. So this is just more data backing it up, right? Backing up, some of the things that we talked about, right? And the potentialness for this to be, a bull market and continuation of the bull market in 2024. Now, this, 98%, is that 100%? No, right? There's 2% of the time it hasn't happened. Right. So it's not like it's 100%, and, past performance is never going to indicate future performance. So you can't live or die by some of these statistics. But when you start stacking them up against each other, it makes a very compelling case. Right. And that's what we're doing is, we're trying to gather the most info, the best info that we can, to really help us, form our own opinion on what the market's going to do. It's not going to tell you whether it's going to go up in a straight line, and it doesn't tell you that, hey, there was also a 15% crash or a 12% crash before the market, ended, and higher, 10% or higher. But it's something to think about. Right now, the median gain, okay, on this data set is 13.8%. So is it a sure thing? Nope. But it's an item for the favorable side of the ledger. Now, this is another incredible data set right here. For only the fourth time since 1950, the McClellan Summation Index for the S&P 500 is set to cross 1500. The only precedents are the end of bear markets in 1970, 74, and the early 2010s. So what is the end of a bear market? Well, that's when you start a bull market, right? So basically, this is saying that, this is a very bullish signal for the longer term, right? Now, whatever you define longer term is, based on your own, but when a lot of surveys were done, most investors, and retail traders, long term typically means a year to them, right? Now, typically long term would mean 10, 20, 30-year time horizon. But keeping the fact that retail investors and retail traders, a year is typically long term to them. This looks like a good long term signal right here. Okay. Again, being that the only precedents are the end of bear markets in 1970, 74, and early 2010s, when the market, started a very nice rally afterwards, right? You can see the signal here, we go up, signal here, huge, massive bull run into the 2000s, into the dot-com bubble, and then here another, signal, and then huge, massive bull run. So, this is where we're at right now, and it's very possible we could see an extended, rally into this bull market, right? Now, stocks go up and down. 2024 won't be any different. It's my biggest, boldest claim ever, right? But yeah, just kind of this right here just shows you guys, hey, you know, at the end of the day, things are going to go up and down. And if you truly have a long-term time horizon, right? So, 10, 15, 20 years or more, then you really just want to accumulate, right? Because on average, the stock market goes up more than it does go down. And, you can accumulate things like the S&P 500, the NASDAQ 100, VTI, whatever, it is that you guys want to get into. And feel a little bit comfortable about it, right? And oftentimes just dollar cost averaging into indexes, it's not flashy, it's not crazy, but if you did that in 2022, all right, that means that you bought all of those dips, right? In 2023, a really successful year for the market. A lot of people don't realize, but the NASDAQ had one of its best performance years ever in history, like top 5 performance years ever. And people didn't realize it, people didn't feel it because they were so stuck in, living in 2022, right? They either wish that they bought the dip in 2022, or they wish that the stock market would stop rallying because they didn't buy the dip, and had a lot of anger. There was a lot of people upset, for the NASDAQ to have one of its best years ever, going up over 50% in a single year. You couldn't tell, right? It's not like people and everyone was just telling you like, oh man, I'm making so much money off the NASDAQ and stuff. It was a lot of angry people. There was a lot of people telling you that, things should be crashing, things will crash and burn at any given time, right? Now, these are the S&P 500 index quarterly returns based on the 4-year presidential section, or presidential cycle. And we're at this area here. All right, Q2 is so basically, in my opinion, I think that the first half of the year is going to be a little bit tougher. Okay. And there's a few reasons for that. I do think that, like, hey, we've already experienced a little bit of a pullback, but if we get a 5 to 10% correction from, the recent highs, it wouldn't really surprise me. All right. The stock market pretty much ripped straight up for 2 whole months. And so if we were to experience some chop or a pullback within the first, 3 to 6 months of the year, not too surprised by that. And if we do get that 5 to 10% correction, that's when I would be looking to start accumulating some positions, because in that second half of the year, that's when we're going to have that election cycle. Okay. And that's when there's going to be a lot of, you know, attention on the markets, right? And maybe the market's a little bit fearful. Okay. Oftentimes around these big elections, it's not like you're going to see a big face ripper rally, because you have to think there's a lot of factors, right? Policy changes, where money is basically going to get pumped into the economy based on, presidential policy and political things like that. So, it would make a lot of sense, in my opinion, for us to see a little bit of, just some consolidation or some pullback in the first half. And then as we get closer to the election cycle, or to the election, I don't really see the stock market tanking the entire time that, they're doing the presidential debate and things like that, right? So, the one thing that I do want to mention, and I don't really have a slide on here for it. I do plan on doing kind of a dedicated video on it, but this will be just like a little preview, is advertising companies. Okay. Advertising is going to be a big theme, in my opinion, for 2024. Now, why is that? Because of the election. Think of how much money gets spent on advertising for these political campaigns. And who's going to benefit from those? Well, it's going to be advertising companies. It's just that simple, right? You can't avoid, you can't avoid those ads, all right? Whether you try to or not, you pretty much have to stay off of all social media, not watch any content, not listen to the radio, not listen to anything, not listen or watch anything to avoid, seeing some type of ad for one of the candidates running for election for the U.S. presidency. Okay, so like I mentioned, I will cover a dedicated video to that. If we do get a significant pullback in the market or correction or something like that, I'll be looking a lot at some, advertising companies, advertising stocks that could really benefit from the increased advertising spending in this election year. Now, what is the sign of a healthy market? Well, the 50-day moving average. Okay, so if you were to take a look at your 50-day moving average, right, which is this blue line, it's not an exact science, but can be used as a general green light, red light to be in/out of the market when above/below the average. All right, and so you can see here we get below it, and maybe it's time to be out of the market, right? Here we get above it, you can try to go long, all right, and like we said, it's not going to be an exact science, but generally, this is a good guideline, right? And you can see here recently, once we got above that 50-day moving average in the beginning of the year, right? This is 2023. You can see in February we crossed above. Then back in March, heading towards April, we dipped below it for like one day, and then really that was just you're all clear, your signal that hey, everything's all clear. This is a sign of a healthy market, and you could have ridden that up onto the highs, and then you see we come back and we pull back later in the summer, and then here most recently, November we got above the 50-day moving average, and it's been signs of a healthy market. If you take a look where it's at right now for the NASDAQ, this is the NDX. It's going to be right around 16,000, okay, which is also, an old demand zone, basically around 1570, or I'm sorry, 15,700 to about 16,000. There's going to be some demand there, and there is also your 50-day moving average near that area. So if we were to pull back and correct lower, that's going to be a really interesting area to see, hey, do we get a green light to continue heading higher, or is it going to be a red light and we could come down? There's a gap here, there's a gap here, there's a couple gaps down on the S&P, and different things like that to be mindful of as well. Now, when we talk about stock market cycles, obviously, we've got the bull markets in blue here. We've got the bear markets in orange. If you look at the average return, all right, for these bull markets, it's 151%. So, that's not in a year, all right? That's not, in a super short time period, but that's the duration of these bull markets, right? Or the average return during those duration, and the average duration is 51 months. Okay, so that's a little over 4 years. Now, some of them are longer, some of them are shorter. Yes, that's how we get an average. And your bear market, the average return is negative 34%. And so the recent bear market didn't quite hit that, right? It came down to negative 25%. But we're basically only about 20% into the average return of 151% right now in the current bull market that we have. And we definitely are not 51 months into it right now, depending on where you want to say it started, where you want to say it ended. Some people will try to debate about that, but it looks, it appears that on average, historically, via the data, we still have a few more years to continue into this bull market. All right. So, pretty excited about that. A lot of people are calling this the roaring 20s, suggesting that, the 2020s are going to be very strong year. And if you think about it, in terms of a decade, well, we had the pandemic, okay, which oftentimes people consider a lifetime event. Right, that was 2020. We had the 2020 bear market, and then we had a bear market in 2022. We've already had two bear markets, guys, in the decade, right? In the 2020s, and we're just now entering into 2024. So, I mean, if you were to take a look, um, there's more bull markets than bear markets. All right. And so if we are really starting another 51-month average bull market, that would make sense, right? And that would give us some years, right? And put us closer towards the end of the decade. And then maybe closer towards the end of the decade is when we start to see a little bit of a pullback or maybe a new bear market cycle begin. Right now, if you think that that's true, okay, and you want to look for really good companies, these right here are the characteristics, right, of the greatest winning stocks before, right? Big highlight, big emphasis here on before they made their moves. Now, number one is going to be major increases in acceleration in quarterly earnings per share. So you're looking for 30% or greater. This was the dominant reason behind their success. Now, it's not just major acceleration and increases in quarterly earnings per share, but it's also in quarterly sales. So, you want to look for stocks that are, receiving increases in earnings per share and quarterly sales of 30% or greater on a quarter over quarter basis, right? Um, 80% came from the following five groups. Okay, so these are maybe the sectors, maybe these are the groups that you want to look at, right? You have consumer slash retail, you have computer related, you have drug slash medical, you have financial, and then you have leisure slash entertainment. And then the fourth, and one of the ones that I really like the best, because a lot of people seem to get this wrong when it comes to, using some indicators such as the RSI or moving averages and things like that, is it's got very strong technicals, right? And so 99% of them were above their 200-day moving average, and 96 were above their 50-day moving average. All right, the average relative strength was 92. That is extremely overbought, right? And so if you see an RSI of 92, the average person is going to say, oh my gosh, that thing is super bearish. Look how high the RSI is. Look how overbought it is. Remember, what it's telling you is that it's extremely strong right now, and you're seeing extreme amount of buying pressure, and you're seeing a lot of people wanting to own this stock and willing to pay a premium for it. And if you can find the reasons that people are willing to pay that premium, and if those reasons are these four right here, then maybe that's something that you want to look into, right? This is from the 40 Great Stock Market Winners from Joe Fahmy. All right, Joe Fahmy is really great. He's got a lot of great work as well. I don't think he came up with this necessarily, but he did just put it out here recently. And I'm trying to get some scans set up to scan for companies meeting these requirements, but it has not been easy. Okay, I can do about half of it in TradingView, half of it in Thinkorswim. I had to create a whole custom indicator for Thinkorswim, and it's just been a pain in the butt so far. But when you're looking for the greatest winning stocks, right? Sometimes, it's not meant to be easy, right? So I am looking forward to whenever I get that figured out. I think that will be very, very nice. And I'll be sure to share it with you all once I do get that completed. All right. Now here we have the first 5 days indicator. This is something that like everybody is really obsessed with lately. And all of the ones that I see, people only seem to chart and show the since 2019, which makes no sense to me. Like, well, what do we care about the past, 3 or 4 or 5 years, performance, right? Like we want to look like over a long period of time. And This one right here, this chart does a really, really great job of it. So the first 5 days is going to be in the darker blue, and then the full year percentage change is going to be in the lighter blue. And you can see here, guys, it's a very powerful indicator, right? You can see when it's positive, right? The dark blue, right? Then the light blue typically seems to be positive. When it's negative, you typically see the full year change negative. So there's lots of people that say as January goes, so the market goes, meaning that like, hey, if January is good, then the stock market should be good for the whole year. If January is bad, the stock market should be bad for the whole year. But it's not consistent, right? It's not 100%, right? If you take a look at this time period here, right, we had the first 5 days were positive, but then the year performance was negative. Over here, we had the same thing where the first 5 days was actually negative, but the stock market performance was positive. Here, we have the same thing. All right. Over here, we have the same thing as well. Here again. All right. Here again. Here again. And, that's about it. So, you know, I don't think it's the best indicator in the world. I think that the January performance statistics are much better. Again, this is only tracking the first 5 days of January versus the actual whole month percentage gains and performance. But overall, it does show that there is some significance, right? It's not 100%, but over the past few decades, over the past couple decades, it has been overall a pretty good tell and a pretty good sign of what could potentially be to come for the rest of the year. Now, thanks for watching the video. Smash the like button, subscribe to the channel for more. Don't forget to check out the newsletter, Investment Intelligence. You can sign up for that for free using the link in the description. Get those emails to your inbox every single week. And if you want to get access to all of the different analysis, all the different trade ideas, you guys can join the Discord. Remember, promo code JAN24 gets you in for just $1, right? So simple dollar. You guys can get in after that. It's less than a cup of coffee a week at $10 a month. So I'll be happy to have you guys in there. Smash the like button. See you in the next one.